markets looking to rebound. After a week fraught with trade tensions, the Dow is in the midst of the longest losing streak since March of last year, down 8 days in a row. Joining us right now is Pacer ETFs President Sean O'Hara. Sean, good to see you.
Good morning.
What are you watching right now? Where do you just see the flow?
There's such a battle royale going on right now, isn't there? You get such great economic news. You've got good GDP growth. You got low inflation, low interest rates, and good earnings. And then it seems like every day there's a headline that gets in the way. And I think the market's a little skittish right now, trying to figure out what's real and what's not. And can this market continue to sustain itself based on earnings and the underlying fundamentals?
Are investors changing then where they're putting money? Where do you see the flows?
So our flows are going into strategies like the Trend Pilot, which uses a 200-day moving average to move a portfolio in and out of equities, so a little bit more risk averse. We're seeing big flows into high quality value strategies like our cash cows. You know, it's interesting, you talk about technology, and I'm going to tie all this together in a second on the technology side, but if you're concerned about trade wars, for example, and tariffs and things of that nature, we made an overweight recently. I think the last time I was on, I talked about we added Macy's to the portfolio. It's
been a
home run for us, right?
Macy's,
we added a whole basket of specialty U.S. retail like Polo, Ralph Lauren, Dick's Sporting Goods, and Foot Locker, and they've been amazing stocks for us. And so they're more resilient because they're so inexpensive versus their free cash flow yield, if you will. And so if you're worried about trade, you can move that way. We also like technology, but not necessarily big technology. We like the chip makers. We like Micron technology, which if you're interested in the Internet of Things and autonomous driving and artificial intelligence, the chips that they manufacture are critical to that and very inexpensive stock.
Yeah, I think one of the most important things is May retail sales showed that it completely blew away expectations, and so the consumer's back. So we're talking about economic data, but also yesterday we saw one of the most interesting things come out of the Supreme Court, and that was they actually did the ruling on the sales tax, right? So that was all the fervor, and when I've looked at what's happening in retail land, it just further lends credence to the retail story that these stocks are going to do well going forward. So the retail apocalypse is over. What are you seeing?
I think that's true. I think they've all figured out how to manage in this new world that they're in. E-commerce is 10% of all sales right now, and it's projected to go to 15%. That means 85% of all sales are going to come from bricks and mortar still. So it's not like it's going to zero. And you have operators who have figured out supply chain logistics. They've shuttered bad stores that don't produce the right amount of revenue or profit, and I think they'll come through this okay. The e-commerce story is an interesting story. Like most people don't think about this, but when you press send on your computer to buy something online to when they press your doorbell, you can track that transaction through publicly traded real estate, cell phone towers, data centers, which is a huge growing business that it happens to be in a bad
REITs.
Yeah, it happens to be in a bad neighborhood. Everybody thinks real estate's a problem, but when you look at the cell phone towers like Crown Castle, or you look at data center people like Equinix, their business is going to continue to grow. And then there's a secondary piece of this, because whether it's e-commerce real estate, for example, or whether it's the Internet of Things or artificial intelligence, all that relies on that same infrastructure and has to grow. So we just launched a real estate ETF, SRVR, that basically owns that leg of it.
Yeah, on Equinix, which he brought up, 70 to 80% of all daily internet traffic goes through their servers.
Wow.
Goes through their data centers. People don't understand it.
No, that's true.
And they just had their analyst day 2 days ago, and analysts upped all their expectations because they expect revenue growth of 8 to 10% out to 2022, but they expect earning growth of 25% or more because all those companies want to be next to each other. Amazon wants to be next to Microsoft, next to Google, next to IBM, and they co-locate together. So they just hook up their servers together.
Speaking of, what about tech? I mean, what about tech? So all of those companies you just mentioned, near all-time highs or hit all-time highs this week.
Yeah, we're overweight technology in one of our value funds, which is like an oxymoron.
Value fund.
So our U.S. cash cows funds, cows is actually the biggest holding is technology, but it's not the names that everybody thinks about, not the Facebooks, Amazon, Netflix. It's the chip makers, for example, like we mentioned earlier, Micron Technology, which trades in single-digit PEs. They're going to buy back $10 billion worth of their stock. Their free cash flow is huge, and their free cash flow yield is high. So technology is not going anywhere. For all the things that are going to happen, I've said them now twice, I'll say them again. AI, autonomous driving, the Internet of Things. I watched a commercial last night. We're all going to one day have a refrigerator that will tell us how old our milk is, because we're going to be connected to a computer someplace, and that has to be connected to a cell phone network somehow. And so that part of the cycle has still got a long ways to go, and it can't get done without the chips.
Just really quickly, we've got the Supreme Court decision, which we referenced briefly, that ruled states can collect sales taxes on web purchases. It doesn't really impact the largest 100 Internet retailers as much. 87 to 96% of sales from those top 100 Internet retailers are already taxed, but it does potentially open the door for states that are in dire financial straits, like a Connecticut, for example, to say, hey, we're not only going to force the collection of sales taxes, let's start taxing things like not just web purchases, but maybe streaming services, app purchases, things like that. I think that that's one of the concerns that the Wall Street Journal points out today, and that's what the discussion that investment managers are going to be having about what's going to be the bottom line impact on all Internet-related businesses.
Yeah. It's interesting. I mean, I guess when the rule that they weren't paying taxes was first implemented, online shopping wasn't where it is today.
It had to do with mail orders, is the original ruling that came out
today,
because it had.
It's pretty, I mean, online is so strong.
E-commerce sales are going up 16% year over year, and it's less than 10% of overall sales, as Sean alluded to. But retail real estate is up over 7% in the last month.
Don't you think we should have the Beatles, I'm the tax man, playing in the background for us?
Well, again, it's states increasing their authority to collect taxes from and Internet businesses, and then you have the tariffs. Those are a tax.
Yeah,
tariffs are taxes. Period.
Well,
and
Chief Justice Roberts said the Congress should have done this, not
I was
the Supreme
finishing
Court.
a thought about the tariff thing. Tariffs are taxes, and that's something that the markets have not digested
Nobody
yet.
argued that.
But there's a way in the U.S., for example, to deal with that, which is to buy small caps and mid caps. For example, our best performers are small caps year to date, or to look for companies that don't necessarily have a cross-border business, that are primarily in the U.S. or that are located in a part of the overall market that just has such overall strength with regard to growth that they should be able to plow through some of these impediments.
But I think what you're saying is states and, investors haven't figured out yet that these tariffs are a tax. While you have Internet taxes now going up, you've got tariffs that equating taxes. It's getting more expensive.
Every investor I know knows a tariff is a tax.
Maybe the trade situation gets resolved really quickly.
Right.
Maybe we end up being the winner very quickly. But you don't know right now.
No, we don't know right now.
And that's why every day there's this battle royale going on, because the underlying fundamentals are great, but every time you hear a story about that, it sort of spooks people a little bit.
It's uncertainty. Yeah.
And it's reflective of what general population thinks, too. When you look at polling, people are saying they're uncertain. One day they think it's going to be great. The next day they're not certain. So
I do. I've been doing this 30 days. I wake up, I put you on, I look at the futures. If it's up, I feel great. If it's down, I'm like, holy cow. So I understand.
Having said all that, it sounds like you would be putting new money to work in this market, even with the strength that we're seeing today.
Yeah, we just rebalanced our portfolios on the cow side, so there's 4 of those. We lowered the PE on every single portfolio. We increased the dividend, and we increased the quality of what we own. So there are, we focus on the big indexes and all of what's going on the Dow, on the S&P, and the NASDAQ, but investors should be investors. They should be buying things based on solid fundamentals and buying things that are inexpensive relative to everything else. You'll make money in the long run.
All right, looks like investors may make some money today. We've got a rally underway with the Dow up 112. Sean, good to see you.
Thank you.
Thank you so much. Sean O'Hara there.